Hang Seng, that's trading with mild positive as of now, 46 points up. That is 0.2% of uptick there.
Sharp rise in retail loan write-offs, particularly by private sector banks, which could be masking deeper issues.
23,550. We're staring at a downtick of nearly 100 points at open.
So it's been a wonderful, year for stock picking. And while the Nifty, which is the large cap index, is up 8 to 9%, you have the broader market which has done really well.
And usually second half of the year is always better in the nature of business that we are in.
There has been a little bit of a recovery from the day's low because we went down to levels of even 23,500.
Over the last 2 years in a row, Bank Nifty has actually underperformed Nifty with respect to returns.
It's another session where the benchmark indices are in the green. Another session where you saw very weak cues from overnight markets.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that was the day so far, the last one of 2024, and we've entered the last hour as we say goodbye to 2024 and welcome 2025. Hello and welcome to Closing Bell live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Lata. And Lata, finally, when you look at the market action, the recovery from the lows, 170-point recovery on the Nifty to pretty much come to the flat line. It's giving you the little bit of a festive cheer, right?
Oh, absolutely. The stocks have come down for their New Year's Eve party.
Yeah.
And I, for once, want to say, I told you so. I dressed in green, expecting that in the last hour, we could have some NAV management. After all, volumes are thin. And there isn't that much of incremental bad news. You know, when they look at the dollar and the bonds, they've not given you that much bad news. So probably a pull-up was possible. I always thought there was a bit of a lack of cheer in midday trades, where at one point the Midcap index went even 1.1% lower. And the big caps were trading. Nifty was down to what, 23,440 thereabouts. So we saw that 23,500 getting taken, but it's a good 100-point spring up from that level. And we also have the mid caps up about 1.2% from the day's low. So it looks like we could end with a maybe brighter shade of green if this trend of the last half hour continues. I think the standout performance for the big caps came from Kotak Mahindra Bank, from Trent. Those are the two heavyweights that moved well. And ONGC has been, of course, in the green from the word go.
You know, in fact, we should pull up the contribution of the Nifty Bank, not the Nifty, and you will see how Kotak Mahindra Bank has moved. It's recovered close to about 3%, 4% from the day's low right now. It's it's recovered 3% from the day's low and is now up close to about 3%. So Kotak Mahindra Bank, 100 points on account of Kotak Mahindra Bank. And again, the FII-related, banking stocks like an HDFC Bank or ICICI Bank, they're still on the red side.
Yeah,
so that gives you the...
I must warn you that there were rumors floating around about Kotak Mahindra Bank.
Okay.
I do not want to mention it, but most people would guess because it's the whisper campaign was in the market. But I think that could be behind this positive reaction. But let's see, until the end of day, the news can still come.
All right. So that's one thing in terms of the banking action. IT has been on the back foot since morning. So the Nifty IT index is down 1.5%. Again, there has been a recovery from the lows because the Nifty IT index was down nearly 2.2, 2.3% at the session lows. But under pressure now. Tech Mahindra, TCS, Infosys, broad-based sell-off when it comes to IT. Adani Enterprises is weak in trade after yesterday's massive 7.5% rally. There is a bit of a give back. And FMCG, of all the indices, the Nifty FMCG index is the only one where there hasn't been any return. It's absolutely flat year to date. But again, on the last day of FMCG, I'm not sure if it's a harbinger of things to come, but the last day, things have turned positive for FMCG. And pharma continues to be active. Even today, Nifty Pharma has been the best performing sectoral index of this year with a 40% up move. And even today, it's going strong.
Somehow I can't get my head away from the fact that if FMCG is moving, if Kotak Mahindra Bank is moving, if Keynes and all those EMSs are moving, are they not favorites in portfolios of so many funds? So maybe there are other reasons why it's easy to move them in a thin market.
Okay, so let's find out how you should position yourself in the last hour of trade. Nagraj Shetty is now with us for a few closing strategies. Nagraj, what have you made of today's trading action and your stock calls for the last hour?
Hi, good afternoon, Rima. Nifty has been in a range-bound action over the last 5-6 sessions. We may observe that at the higher levels, 24,000 has been a strong resistance, and at the lower level, Nifty has showed some smart upside bounce from near the support of 23,500 levels. I think this range is going to be remain for at least for some more sessions, and having moved up from the lows of around 23,500 levels, we could see some more upside bounces coming in for the Nifty in the next 1 or 2 sessions from the lower levels.
Okay. Any specific stocks, Nagraj, that you would recommend a trade for the last hour?
Yeah, I have 2 stocks. One is from a long side, one is from short side. Long side, I would like to mention about the pharma. Pharma sector has been in a consolidation phase, recently broken above the consolidation, looking attractive on the charts. From the pharma front, Aro Pharma, Arvindo Pharma is the one after a longer consolidation movement. It has broken above the hurdle in the last couple of sessions. Currently trading around 1335 levels. Overall chart pattern is looking positive. I am expecting this to move up towards the next upside target of around 1435, 1440 levels, and one can place a stop loss at 1290. And another from metal side, metal still looking weak. And the Hindalco is the one who has been continuously in a downtrend. Lower tops and bottoms is visible on the chart, which is indicating the downside momentum which is in force for this stock. I'm expecting more decline for Hindalco, currently trading around 1603, 604 levels. One can look to sell at this point of time. 570 is going to be the downside target for the Hindalco, and 625 is going to be the stop loss.
Okay, Nagraj, thank you very much for that. We'll try and get back to you for the BTST trades. Now, Rima began by saying that stocks have come out for a New Year's Eve party, perhaps. Well, that's what we have laid out for you. As we wrap up on this year, in the final hour of trade for 2024, let's look at the top 5 winners and losers from different sectors of the market. Our research team is standing by with the full list. Well, as you can see, the team is out in all its grandeur. First up, let's look at the 5 gainers and losers from the large cap space. Abhishek, take us through the list.
Lata, to begin with, Trent has been the top performer. It has more than doubled its stock price for 2 consecutive years. So it has delivered positive returns annually since 2014. M&M is the other gainer. It has seen the sharpest rally in a calendar year since, in the last 15 years. So Bharat Electronics, the PSU defense heavyweight, that's gained about 58% this year due to robust government spending on defense and significant order inflows that they have had. Bharti Airtel has been delivering positive returns every calendar year since 2019, but in 2024, the return that they have given is the best since calendar year 2017. Now, Sun Pharma has outpaced the industry benchmark. A superior ROE profile that you saw for the company this year has led to the stock price outperformance. Now, coming on to the declining side, IndusInd Bank has been the top loser in the Nifty. The rise in slippages on unsecured lending and its exposure to the microfinance sector has weighed on the stock price. Asian Paints has seen its stock come under pressure this year, and that's been hit due to weak demand, margin pressure, and rising competition that you are seeing from new entrants. So high food inflation has disrupted the consumption patterns across India, especially amongst mass segments of consumer. So India's FMCG sector is expected to rebound in 2025 after the fact that high costs, slowing growth, and inflation impacted the stock performance this year. So Nestle, Tata Consumer, as well as HUL, they saw their stock price decline in this calendar year anywhere between 12 to 18%. Back to you.
Thank you. And let's now get to the mid-cap big movers on the way up and on the way down. Vivek.
Well, when you're talking about the mid-cap space, the couple of stocks stand out. And amongst the top 5, all of the stocks have minimum given a doubling return as far as calendar year 2024 is concerned. In fact, the top gainer of 2024 has actually given a has actually tripled in one calendar year itself. So the first stock on the radar, Oracle Financial Services, a couple of quarters where the company gave stellar results led to a re-rating in this particular name, up 3x or 201%. The next stock is one from the EMS space, one that we speak to and one that we cover quite regularly, is Dixon Technologies. This particular stock is up 2.7 times in this calendar year, 170%. PB Fintech, the other stock, one stock that actually saw quite a bit of volatility given the company's likely foray into a backward integration of healthcare. But despite that, this particular stock up 162%. BSE, both of the exchange stocks did quite well, but BSE outperformed 140% higher. And RVNL, railway stock, making its name in the top 5 of the mid-cap space, up almost 135%. But when you're talking about some of the laggards, quite a few stocks have eroded significant value. First on the list is Vodafone. The stock has actually halved in 2024. Along with that, the next 4 stocks are stocks either from the banking or the NBFC space, and most of these stocks have one theme in common. Most of them are actually having significant pain as far as MFI or rural portfolio is concerned. So Bandhan Bank down 34%, AU Small Finance Bank down 30% for the year, IDFC First Bank down 29%, and Poonawalla FinCorp, which had a very weak Q2, this particular stock too is down 29%. Overall, the gainers in this point of time have actually given stellar returns. The top gainer has actually doubled or tripled your money in 2024.
Oh, absolutely, Vivek. It's absolutely breathtaking, the kind of returns we've got from the mid-cap stocks. So the mid-cap index rose 24% this year, and the small-cap index 26.5%. So obviously, there are some stellar winners. Actually, speaking of small-cap, Upasana is here to tell us what went up and down in the small-cap space.
Well, this year was all about the mid and small cap outperformance. Now, coming to small caps, what are the key gainers out there? Well, EMS was one of the themes that was buzzing in this year, and even there is a positive outlook for the upcoming years on the back of its capacity expansion and PLI. Now, Kaynes Technologies is one of the stock that has been an outperformer, gained nearly about 178%, followed by Dixon. Amber Enterprises also is one of the star performers, up nearly about 134%. Aegis Logistics is the next one, up nearly about 134%, followed by Blue Star, which remained in focus throughout the year, up nearly about 127%. And lastly, IFCI Limited also remained in focus, gained almost about 106%. Now, coming to laggards, it's mainly the media and NBFC space. Now, Z Entertainment tops the list with a loss of 56%. Credit Access Grameen down about 44%. RBL Bank down about 44%. Tanla Platforms down about 39%, followed by Aarti Industries, which eroded nearly about 36% of its value. And lastly, IFL Finance down about 28%. Now let us look at the gainers in terms of NSE Small Cap 250 Index. It is topped by GE Vernova TND India, which was up nearly about 307%. KFintech 219%. Motilal Oswal Financial Services also was up nearly about 200%. Anant Raj also was one of the stocks that remain in focus with a gain of nearly about 191%. And Kaynes Technologies, as highlighted earlier, was one of the key gainers in this index with 178% gains. And lastly, Godfrey Phillips also remained in focus with a gain of nearly about 146%.
Eye-popping returns over there. Thank you, Upasana, for highlighting that. But let's move on now to the commodity space, because that wasn't bereft of drama and big action. Manisha is here with a wrap.
Well, thank you so much for that. 2024 indeed was a year of record highs in gold and silver. While the gold prices hit all-time highs in dollar, Japanese yen, Indian rupee, Chinese yuan, Australian dollar and various other currencies, well, silver prices hit an important psychological 1 lakh rupees a kg mark for the Indian markets as well. But as you can see, while gold is putting best 2024 as a performance since 2010, the gold and silver prices gave better returns due to rupee depreciation in the Indian markets than what they did in the US terms. There you can see that difference there. And since we are talking gainers first, well, the US natural gas prices within the energy basket has seen prices gain up by 65% for 2024, trading at the highest since December 2022 on the back of strong global demand, geopolitics, and expectations of higher LNG export permits as promised by the US President-elect Trump. Well, the rest of the energy pack, as you can see, has seen a bit of a decline continuing. The Brent is down by nearly 4.5%, while the WTI crude prices also are down nearly 3% there. This is happening on the back of weak Chinese demand. But staying on yet again with the gainers, let's talk about coffee, cocoa, and these prices also hit record highs in 2024. While the Arabica coffee hit record highs at $3.5 a pound, gaining around 70% in this year, you also have seen the highest levels of 1977 come in for this one. Robusta, as you can see, is up 90% in 2024, and cocoa prices hit all-time highs, gaining 160% in this current year. In 2024, the base metal prices also started the year as the weakest commodity asset. But it was by the mid-May that you saw the prices as best performing in sense of an asset class, as funds invested in metals that were going to be used in AI and green transition. But by the month of July, the global manufacturing was declining and China economic data wasn't improving either, taking the metals sharply off its 2024 highs. But closing in green, especially with zinc performing with 15% of gains. And you also have seen copper and aluminum gain anywhere between 5 to 7% onto this one. Well, 2025 is expected to test us further, especially as the new US administration under Donald Trump takes over on 20th of January. And then you would see details on trades and tariffs and pledges. It will all start to becoming more clear, as would the retaliation from reactions from other countries. The other thing that the street will watch out for is the China stimulus measures, which are expected to show result in 2025. And the global central bank policies will also shape up 2025, as would the currency moves. And then the policies on climate change, geopolitical concerns, is something that 2025 will watch out for.
Thank you, Manisha, for that. Gurmeet Chadha, Managing Partner and CIO at Complete Circles, is now with us on the show. Gurmeet, thank you very much for joining in. So before we get chatting about the market's outlook, tell us your best performing stock of 2024 and the biggest dud.
So it's been a couple of them. One is Dixon, as your one of the team was mentioned. We got lucky. The other one has been the capital marketplace, which is CDSL and BSE. BSE, we probably pulled the trigger a little bit, citing some valuations. And there is another pharma company which has done very well for us, which is Newland Labs. This has been one of our top portfolio attributors, if I may call them, in the portfolio we run for our clients.
Let me ask you an unfair question, Gurmeet. If you have to pick for us one, or okay, let's make it a little more concessional. One or two stocks, even top 3 stocks that will do extremely well in 25, what would they be?
Season's greeting, ma'am. Good to connect with you always. So one play we are very focused on is this entire recycling space. I think we have done a lot of harm to Mother Nature. So one theme we really like is waste management, within which we have Vartec Vava, which is into water treatment. And it is across vertical, whether it is desalination, whether it is seaver, which is the EPC part of it. So to me, it's more emerging like a water technology play. So for example, we desalinate today at much higher cost. Dubai has been doing it at 10 paisa. We sell water at about 45 paisa a liter, which is too high. And with 19% of the world population, we just have 2% usable water. So huge opportunity here. Similarly, in that we have a company which is Ganesha, which is to recycle plastics. So one theme which we really like is waste management. The other one which we are very now focused on is the new energy transition play, which I think is not getting reflected in the Nifty. So one stock which we added recently is Precision Camshaft, which is into retrofitting. So India is a very difficult market. Retrofitting is converting diesel vehicles into electric vehicles. It starts with vehicles which less than 5 tonnage. So Camshaft is their bread and butter product, where they are market leaders. In fact, they're the 3rd, 4th largest globally. And retrofitting is something which is very new. They've just got a 500 order from Telangana. And a lot of state policies have now included retrofitting as part of the FAME subsidies and other subsidies you do. So these are some of the new ideas we are looking to add, and some more ideas in the defense tech space.
Okay. Oh, well, more strength to you if we can have waste management companies not just neutralize the harm we have done to Mother Nature, but also make money for us. But just revise your name again: Precision Camshafts, VATech Vabag, and which was the other one?
Ganesha Ecosphere, which is into recycled plastic.
Okay. Oh, that's excellent. Gurmeet, what a pleasure listening to these ideas from you. Sectorally, what would you be bullish on in 2025? Would it be still good to go with the winners of run with the, the winners of this year, the EMS e-commerce?
So one is the new age space, which I like. I don't think so. The Nifty of today reflects what India is going to be and how India is transitioning in terms of consumption, over the next few years. So we like the names like Zomato. I think Blinkit, the number of orders will go up from, maybe 10 lakhs to probably 20, 25 lakhs in a very short period of time. All of them are doing fundraise, whether it is Zepto, Swiggy. Now, Big Basket has just concluded a round of almost $1 billion. So here the winner takes all. So I think anybody who gets to 60% takes all. So I think that's one space we are extremely positive. And these dark store concept or hidden store concept, which basically uses technology and they are pre-packed stuff. That is how it gets delivered in 15-20 minutes. So I think this is one space which looks interesting. Similarly, marketplaces like PB FinTech, I think look extremely interesting to us. We are tracking some more new age companies, in this space. And the other big theme would be healthcare. I think with or without biosecure law, I think pharma outsourcing will take bigger and forward strides as we move ahead. And I think this is more to do with geopolitical. Also, with the fact that US actually believes that the future of the warfare is biological warfare. So I think the opportunity is huge. Our market share is just 2%. So we are tracking a lot of names. We have Laurus Labs and Newland in the portfolio. There's a company which we like, which is Bliss Pharma, which actually makes suppositories. Suppositories are basically something which you give physically to patients who can't take medicines orally. So it's one of the large manufacturers of suppositories and pessaries there. Then we have more names like Hikal, which we are studying. So a lot of molecules are in phase 3, phase 4, where the commercialization rate is almost 50-55%. China's market share is in double digits. So this could be what our IT outsourcing moment in late 90s, the way healthcare is positioned right now over the next few years.
What have you made of easy trip planners? Perhaps have you ever tracked it? The Dishant Pitti, who held about a 49.81% stake when the company went public, as per the RHP, is now looking to completely exit. Step by step, he's already done a tranche before, and now another 14%. And we understand so far he's not managed to conclude the block deal. So what have you made of, the way this has transpired?
So, we had some insights on it because some of the other founders who sold their company to Eastman were our clients actually. So we haven't taken any exposure there, but obviously, promoter exiting, giving a large stake is always negative, in a market like this, but so I'm very gung-ho on the entire travel and tourism theme. I think there's a new index which we have in BSE, which is the travel and tourism index. Actually, people should track that. I think that's where the consumption wallet share is moving to. The other one is the digital consumption we are doing, the money we are paying for Wi-Fi usage, OTT, music apps, health apps. So, the consumption basket is changing, especially the urban one, and that is what to play. So for now, we have, Indigo in the portfolio. There's been the Gangwal stake sale is now mostly behind us. I think fuel prices have stabilized. Indigo is gaining market share. This year, they're already guiding for 15% growth in number of traffics, adding new routes. And I'm amazed by the efficiencies they bring in. Somebody told me they got rid of oven in the flight. So each flight had 3 ovens. That led to a fuel saving of more than 1,000 crores a year. So I think on operational efficiency, I think it's amongst the best in the world. So that is something we are looking at. Some of the airport consumption plays. That's becoming a new luxury and consumption center. The airport model is changing. So we are tracking some of the names there as well.
Okay, that's a bunch of names and ideas. Gurmeet, always a pleasure listening to you. Thank you so much for hand-holding us all through 2024. Wishing you a brilliant 2025.
Thank you so much. Thank you, sir.
Okay, as we step into 2025, CNBC-TV18 has asked some key questions that you would like to ask experts. How will the Nifty perform in 2025? What are the sectors and themes to bet on? Will the faltering GDP growth revive in 2025? Will the Reserve Bank start cutting rates in 2025? We will ask, or we have already asked experts on your behalf. Stay tuned for the most comprehensive market poll that airs tomorrow on CNBC TV18. Welcome back. You may complain till kingdom come about not enough volumes in the market and so many people out for New Year parties and for year-end holidays. But there's one person who's always working the phones, always walking up and down D Street to get you the chatter of the day. Nimesh is with us, our pillar of support for market coverage. Nimesh, it has been a great 2024 for you. I can't even count on my fingers and toes all the stories that you have broken for us. But first, what are the insights you have got today from dealing rooms?
Thanks, Adana. It's been a good year, 24 for everybody, for the markets as well. And surprisingly, on the last day, the volumes have picked up. So that's a big surprise as far as the dealing room feedback is concerned. The volumes, the institutional volumes have picked up essentially because of there is a small market close basket buying is what I understand. So last 30 minutes, you'll see some impact of that volume. And also there is VWAP volumes on both sides at a leading FID. So that's going to add up to the volumes in the last 30 minutes of trade. So watch out for that sort of volatility. But having said that, for second day running, the PSUs are well bid. I spoke about PSUs selectively buying as well in yesterday's chatter, and it looks like that's got spilled over to today's market as well. So the CPC index is up nearly 1.5%. A lot of the PSU names are seeing a lot of buying interest from larger institutions. So that's overall feedback. From a range point of view, I still believe while earnings will be a big trigger to watch out for, but the Nifty is pretty much stuck between that range between 23,300 on the downside and 24,300 on the upside. So a decisive move has to come on either side once that's taken out. So that's the range for the January series. But surprisingly, on the last day of 24, the volumes have picked up, and there is a basket buying as well at trading FI desk.
Is that, Nimesh, NAV management, or is it some kind of FNO play?
Well, difficult to say, Lata, whether it's an NAV management, because the size itself of the mutual fund industry has become very large. So I don't think it matters much. Of course, there are some stocks where some sort of buying would emerge essentially because of that. But net, I guess today's buying seems to be a genuine buy flow from the larger FIs as well as the mutual fund industry. So that's a combination of that. But difficult to say that it's only because of NAV management, Lata.
Okay, and Nimesh, did you manage to get any stock-specific tidbits for us?
Oh, yes, so the first stock on my list today, Rima, is Lupin. A big move in that name, and the volumes are on the higher side. The FI volumes have picked up as well. And I understand some domestic mutual funds are active buyers in Lupin of late, so almost at 52-week high, and still there is buying interest from domestic mutual funds in Lupin. So that's the first name. The second stock is Indus Tower. From yesterday's low, the stock is sharply recovered, and the volumes have also picked up. But in Indus Tower, again, there is a strong buzz, an indication that there could be another large block in Indus Tower very soon. So need to check whether the institutional holders are a big seller in Indus Tower. So that's the second name. The third stock is GRP. Again, something which we don't talk too much about. I was just reading about the company, hardly an institutional holding. The volumes are very thinly traded as well. But now understand the company is very close to raising funds via QIP. So maybe for the first time, you will see institutional investors in that particular name as well. So that's something to track there. And the last is Sapphire Foods. While calendar last year, we'll order a lot about from QSRs. But this is one stock which has absolutely underperformed and been pretty much on the sidelines. But now I understand that it could be some corporate development in Sapphire and hence some bit of action in Sapphire as well in the last couple of days.
Okay, thank you very much for that, Nimesh. And hope you too have a superb 2025 and enrich us with all that you're picking up from the street. Okay, well, Nimesh spoke about Lupin. Clearly, that shot of hum insulin has helped a lot of institutional investors. But we have a big guest joining us.
Indeed, we've got Tushar Pradhan, the director of Hexagon Partners LLP, on the show with us on the last day of 2024. Tushar, thank you very much for joining in. So give us, briefly first, the outlook for 2025. It's hard to imagine that after 9 good years, positive years on the trot, that again in the 10th year will also give you the kind of returns that we've seen. Maybe not at the index level, but the kind of money that people have made in mid and small caps. What's your view going into next year?
Yeah, I think there is always a mean reversion to all markets, and we all get worried, especially the more statistically oriented, to saying that there has been 9 significant years of positive performance. So is this a year for where the mean reverts? It's a difficult one to call, but I think one has to again understand that the economics in terms of what we talk about where our country is positioned today vis-a-vis the rest of the world, I think it needs to be called out that we are in a much better position than most economies. If you say that, is it going to be a 10th year of positive returns? I think that is making me a crystal ball gazer, which I'm not. But I think if I look at earnings growth and what would the market support over the next few quarters, I think the earnings growth, if it continues to remain pretty much in double digit, we are going to have a reasonable positive year this year, would be my guess.
Okay. Hi, Tushar. Always a pleasure having you with us. Well, I know crystal ball gazing is not very easy, but I'm torn between 2 extremes. On the one hand, for all the defeatism and pessimism we heard in 2022 end and 23, there was no recession. I mean, far from it. The US economy churned out among its best GDP growth rates that we have seen in a long time. The Indian economy, yes, 5.4 may have been a disappointment, but overall, a 6.5 or 6.7% growth is to kill for in a world like this. So should we be go with those optimists, or should we worry about the fall in urban consumption, which clearly stocks FMCG stocks? And right now I'm reading data about US credit card defaults jumping to their highest level since 2010. So unsecured loan seems to be everybody's problem. Which way would you tilt?
Again, as I said, I think we generally tend to make a overall prediction for the market as such. But the market is made up of many components, especially so very startingly in the US, where the Magnificent Seven seem to have led most of the gains in the market. And if you look at the rest of the 493 stocks, you will hardly find companies which are, even near to the kind of returns that these 7 have managed to make. And when you have a stock-weighted index which weights in favor of these large caps, especially in the US, you get the kind of return that we've seen. So it is not really the US market that we are talking about. And when we talk about the economy, it's much more broader. And people then try to look at a K-level recovery where there are a certain segment of companies which will do exceedingly well, no matter where the rest of the economy likely to go. I think in India, we will not have a similar kind of recovery. India is a lot more, I would say, homogeneous market. I think there are a lot of contributing factors which will lead to market progress here. And I am more optimistic that in India, there will be a more widespread, I would say, all-inclusive growth, as opposed to in the US, where it was sharply in favor of certain companies. In India, I think the game is really about increase in productivity. What we're going to see is not just pure earnings growth, but earnings growth coming out of significant technological inputs in terms of having companies perform better, which is a structural change. So I would vote for the fact that India will do well on the basis of pretty significant earnings growth coming in for this year as well as the next.
Tushar, so construct a portfolio for us starting 1st of Jan. For every 100 rupees that you have in terms of incrementally that you need to put in the market, how would you position it?
I think it's very important to understand that the financial part of our economy, which is going to drive the entire growth forward, has actually been lackluster in the last year. If you look at private banks, even if you look at certain public sector banks, they've not really participated in the kind of growth that we've seen elsewhere in the economy. With a significantly different balance sheet that we will see for them here, which is probably the lowest level of NPLs that we've seen in a decade. Pretty secure equity capital, as in adequacy, as we call it, and pretty benign interest rate scenario in the sense that we are not looking at a very sharp fall from here, which will indicate that their net interest margins are likely to be very, very, I would say, robust going in the future. Given the fact that they've really taken a lot off from valuations, I would definitely make financials a very large part of my portfolio to begin with. I will follow that up with companies which are export-oriented. We already have seen some sort of a indication of a strong dollar, what it means for the emerging market currencies. And I think as long as we then become a lot more competitive on the basis of the currency, or just the fact that your reported earnings will be so much more attractive when you have a falling rupee, I think that's my second bet. And that actually goes across sectors. And the third bet I would think would be on companies which are really focused on domestic manufacturing, because that is something that we've not really seen come through. We've seen capex done by public sector units. We've seen general government capex coming through, but we have not really seen the private capex take off. If any of that happens, we will see a lot in terms of process industries as well as manufacturing actually take off in India towards the last half of the next financial year. And I think that would be my bet to make up the third element of my portfolio. As a satellite part of the portfolio, where I would say, where else would you put your money apart from these three main sectors? I think I will take a selection of some pharma. I would take some, I would think, construction along the way, because that is part of the game that I think the next year is likely to make.
Okay, that's most helpful, Tushar. For those who are building their own portfolios, that's a lot of good advice. Thank you very much for being with us through 2024, and hope you have a laughter-filled, fun-filled 2025.
Thank you. Thank you so much.
Okay, as we slip into a break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store.
Welcome back. Let's talk about Easy Trip. The stock is under pressure today after the company's co-founder Nishant Pitti announced that he plans to sell his remaining stake via block deal. Hormus is here to tell us more on what the buzz is all about.
You know, there's always a way Easy Trip finds its way to be in the headlines. Now, be it the Maldives controversy or its foray into different businesses beyond its core business, there is a lot to talk about it. Now, let us take a look at the company and what is the latest that has brought it back into the spotlight. Now, news came in on Monday evening that co-founder Nishant Pitti, one of the promoters, plans to exit the company by selling his remaining 14% stake via block deals. However, today, only 1.2% of that stake has been sold, based on the data last checked. Now, at the time of its IPO, the shareholding in EaseMyTrip was divided among Nishant, Prashant and Rikant Pitti. Now, Rishant and Nikant had majority of the shareholding, while Prashant had a negligible stake. Now, post its IPO in March 2021, Nishant and Rikant were down to 37% each, while Prashant's stake remained constant. Now, by June of 2022, both Nishant and Rikant gave 5% each of their stake to Prashant, taking his stake to 10.5%. Now, as of December last year, more than 65% of Nishant Pitti's 28.7% holding was locked up. Now, come March this year, that was over, and then came the selling. Now, in September, Nishant Pitti sold 14% stake in a block deal in what was an earlier plan to sell only 8%. Now, that fetched him a cool 920 crore rupees. Now, Pitti may have halved his stake, but who bought it? Did institutions buy it? Not really, because institutional shareholding in Easy Trip is nearly down to zero. Now, what started off at almost 6.25% at the time of its IPO 3 years ago, domestic mutual funds now have only 0.2% stake in the company. So who's got the stock? No prizes for guessing here. Retail. Now take a look at this. Now, similar to domestic funds, retail too started off at around 6% during its listing in March of 2021, and come December this year, that stake has gone up to 34%. So retail investors technically own 1/3 of the company. Now, in absolute terms, there were almost 50,000 retail investors in EaseMyTrip during its IPO, and that number has gone up to almost 10 lakh by the end of December this year. Now, in January, Easy Trip had suspended bookings to Maldives following a diplomatic row, and a move that was later reversed in October. Now, however, during this period, the number of retail shareholders in the stock has doubled. The EaseMyTrip has on numerous occasions dangled this bonus issue carrot to keep the retail flock interested. It announced a bonus issue in February of 22, another one in November, during which it also announced a stock split, and another bonus issue came in as early as October and November of this year. But have financials matched up to that? Not quite, because the profit at the end of FY22 stood at 24 crore. That number is still at 26 crore after making a peak of close to 50 crore. Now, EaseMyTrip has also been in the news for its interests other than its core business, because earlier this year, Nishant Pitti, along with SpiceJet chairman Ajay Singh, submitted a 1,600 crore bid for the now defunct Go First. Pitti withdrew from this bid in his personal capacity in May, saying that he wanted to focus on the long-term vision of the company. Now, the company also announced plans in September to foray into manufacturing electric vehicles. A travel company making EVs would leave many question marks, but the kind of market that we were in back then, the stock went up 11% post the announcement, only to fall 6% the next day. So what next for EaseMyTrip? Now, to be fair, there are multiple questions that need to be asked. Will Nishant Pitti be able to sell his remaining stake? 2, if he does manage to do that, will other promoters also follow suit? Will retail continue to pile into the stock on this lure of bonus issues and stock splits and so on and so forth? And lastly, all eyes will be on the December shareholding pattern that could be up anytime next month. Now, it's been 4 years since Easy Trip went public. It has had its moments, both good and bad, but the trip ahead is anything but easy.
Okay, that's a fascinating story that you're telling us, Hormuz. I mean, the kind of mistakes and the kind of lures that retail investors have been fallen to over the years. November, I mean, look at the bonus issue and the stock split. The stock fell from 73 rupees to 15 rupees practically in 1 month. It was all share dilution, but it was not shown in terms of profit.
Thank you, Hormus, for that. But just about 15 minutes left to wind down and bid adieu to 2024. Nagraj Shetty is now with us for a few BTST calls. Nagraj.
Yes, market has been in a range-bound action. Nothing has changed significantly over the last 30-40 minutes. And I'm staying with the main call of Ravindo Pharma on the pharma, which has been outperforming since last many sessions. And one can look to buy BTST at the same levels I mentioned. Currently trading around the same level, 1335 level. One can place a stop loss of around 1290 and wait for the target of around 1430 odd levels. in the next day or two.
Okay. Nagaraj, thank you very much for that. That's the BTST trade coming for you. And here's wishing you a great 2025. Okay, the markets are on the verge of breaking into the green. The Midcap is still holding on to its green by the skin of its teeth. We take a break. On the other side, we will track the market technicals with Jay Bala of Cash the Chaos. Thank you very much for sparing time. Well, people told us that there'll be dire consequences if Nifty went below the 23,500 mark. 23,300 is seen as a line on the sand. What's your sense? What can be the range for the first half of 25?
Hi, Lata. Good to be here and good to speak to you after a very long time. I've been maintaining since the end of September that the markets are heading towards the June 4th low, the post-election low of about 21,300 and change. So that's still the higher time frame objective, and the markets haven't done anything to disturb that or put that in question. So the very short term, the markets are either breaking the November low of 23,264 either straight away, or it's going to 24,100, which was the figure I had given last week. The market went to 23,900. So the markets are still, in line with breaking the November low. Reliance's underperformance continues to be a reason for caution.
Okay. Well, that's the kind of the support, if you please, as you say, 21,300. If you have to look at potential springing up from those lows, what kind do you think 2025 ends with gains? How much?
Yeah, fair question. As of now, I'm working with this being just a correction within the larger bull market. There were three options in front of me. One, I'm taking the least bearish view. For that itself could bring the market down to 21,300. The intermediate supports there on the way to 21,300 is about 22,600, and then 22,000, and then 21,300. But what could happen post that, we have to wait and evaluate. I anticipate the first half of 2025 to be negative. Post that, I anticipate a bullish resumption of the markets and go past the all-time high. But that is just a roadmap. I'm very flexible about it. I'm open to a deeper correction because the signal from the US markets is that the technology stocks have possibly topped and it's due for a very sharp correction. If that were to happen, the IT index, which is not yet broken down, that could break below 41,000. So watch out on the Nifty IT index. 41,000 is very crucial. And as the signal from Bitcoin, a risk-off, risk-on measure, is signaling it's clocked a very important top. I've been pointing that out for the last 2 weeks. I think Bitcoin is likely to halve from the peak value of 108,000. So I'm anticipating about 49,000. So risk-off is the signal from the markets.
That's serious. If Bitcoin were to fall so much, then it is going to create ripple effects in all markets. Let's go stock-wise. The winners of this year in the Nifty, at least, has been Trent and M&M. Basically consumer discretionary. If you were a fundamental analyst, are those continuing to be good bets in terms of charts as well?
Yeah, Trent has been an amazing stock, and I believe it's got a long-term potential, but in the short term, I think it's got corrective downsides to work with somewhere about 5,000 mark. So, it's got a little bit downside. And if you look at the India consumption index, it's got a reversal signature in the medium term. And I pointed out in October, the FMCG index, in my opinion, has clocked a very significant medium to long-term top. So the consumption space isn't actually very positive. I even pointed out the ITC might have clocked a very long-term top. So within that consumption space, things aren't looking bad. But Trent is looking like a very positive candidate within that space. It might be an outperformer there. And what is the other stock you said, Lata?
I asked for M&M, but okay, let me just rephrase. Instead of throwing stocks at you, tell us which stocks or sectors do you think are on the verge of an up move?
Yeah, I think I've been positive on pharma, but pharma as a whole isn't positive now. But right now, Sun Pharma, Lupin, they are looking like they'll be outperformers within the pharma space. But if you look at something like Dr. Reddy's or Cipla, they might have, and Divi's probably, they might have clocked important top. But I've been bullish on pharma since 2020. So for the first time, I'm selectively turning bearish on some of the pharma names. But as I said, Sun Pharma, Lupin, and Laurus might be short-term outperformers.
Okay. Any long-term outperformer? What I mean is anything that looks like turning upward.
Yeah. I have two picks for today. Both are short-term, and I'm cautious on the long side. So play the long side with, if you normally play, say 1 lakh, you have to come down to something like 10,000. So basically you have to come to 1/10 of your original position sizing. So with that in mind, I'm bullish on Godfrey Phillips, probably heading for fresh 52-week highs, along with the objective of 6,200 for the short term, and then higher on. Stop loss is 4,700. As far as other stocks which might turn up, I'm a just-in-time guy, so I'll wait for the markets to come towards the June 4th low and then reassess what are likely to turn up. But as long as the Nifty IIT index manages to hold above 41,000, there might be some winners there. TCS excluded. TCS is looking quite weak. I've been bullish on Coforge and Persistent. They're also coming to an important resistance and probably turning down for a correction. But if the markets were to drop like I anticipated, I'll try to turn bullish on the Nifty IT index.
Okay. This year, TCS is up only 9% and it's underperformed Infosys, which has seen a gain of close to about 20%. And this Q3 would be the third consecutive quarter where Infi's growth rate is expected to be more than that of TCS. But Jay, what about banks, especially large banks like HDFC, where investors are long-term bulls on it? Do you think technically there is support for HDFC Bank?
See, HDFC Bank has closed below important level that I pointed out last week. That is 1816. And it should not have done that. And SBI, HDFC, and ICICI were the holdouts within the banking sector, which was the reason for outperformance for the banking space. But I think the banking index is set to break down because of HDFC and ICICI. ICICI is set to drop another 5% to about 1200. HDFC probably dropping to about 1600. But from a long-term perspective, this looks like a correction within a longer-term bull market. But HDFC could see a deep correction somewhere close to about 1500, or maybe even 1300 if things were to get a little more, shaky. But the medium to long-term trend is still up. Probably got one more long-term highs to clock. But before that, it's likely to see a correction to at least 1500.
Okay. Jay, what about gold and silver? Since you spoke about Bitcoins, it just occurred to me. Gold was making a lot of money for people all the way up to maybe November, and then we started seeing a bit of reverses. How about in 25?
Yeah, the first 2 months are going to be very crucial for precious metals, Lata, because from a long-term perspective, that is mid-2026, I'm anticipating dollar index to clock about 123 to 126. So if that were to be the case, I think gold has already topped out, but that's not my base case. I'm anticipating gold to clock one more higher high, but that's subject to revision depending on what the dollar index does in the first 2 months. Silver, I'm a little more bearish. From a very short-term perspective, I'm anticipating gold and silver to first touch about 2400 on COMEX, and then about silver to about 27 on COMEX. And then gold might recover to about fresh all-time highs of about 3,000 odds. But as I said earlier, it's subject to revision depending on what the dollar index does in the first 2 months. I'm very bullish on the dollar index. As I pointed out at the beginning of the year to Prashant, 2024 will go down as a year people underestimated the strength of the dollar index. That's exactly what happened. With a very short-term dollar index got one short-term higher high to about 108.85. It's likely to pull back to about 105.5. So if that doesn't happen and dollar were to strengthen much beyond, larger downsides in store for the precious metals.
Okay, 123 did you say for the dollar index? Oh my God, that's something else only. I don't know where it'll take the rupee. Thank you very much, Jay Bala, for making us sit up and look at the levels that we thought were given and tell us that things can get much
I know
worse.
where it won't take us, and that is abroad.
Okay, you said it. Thank you very much, Jay Bala. Have a great 2025. So we are winding up 2024 on the note that the Nifty's just about managed to clamber into the green on the last day of trading. It ends flat as flat can get at 23,600. That gives it, some 8-9% gain for the year. But the Midcap index, although it is ending today at a flat, 57,100 thereabouts, is, however, going to end the year with a good 24% in terms of gains. And likewise, the small cap index ends the year with a good 26.5% in terms of gains. Well, what are the big gainers in the market itself today? No prizes for guessing what are the big losers. Easy Trip clearly is the one that's lost about 7%. A lot of the Adani stocks have seen money being taken off. I guess they were all trading bets. Adani Wilmar is, of course, fundamentally driven. That's -6%. Adani Green -3.5%. Adani Energy 2.5%. Those are the main stocks. And Jio Financial down 2.4%. Adani Power another 2.4% down. But on the gaining side, IRB Infra has come out of nowhere. So I guess a lot of short covering has happened. Keynes is up 3%. BEL, big gainer in the index. BEL, ONGC, Gokuldas Exports, Kotak Mahindra Bank. Those were the stocks that saw very good gains as far as big caps are concerned. Anything you spotted?